Elizabeth.
And I'm Vivian.
And welcome to the Entry Level Adulting Podcast,
where we help you to navigate the confusing world of adulting,
one challenge at a time.
Welcome, friend.
Hello, and welcome to the Entry Level Adulting Podcast. I am your host, Elizabeth, and it's just me tonight, and that's because it's very late. And this is a bit of a surprise, quick podcast that I wanted to record because I just finished editing the Taxes podcast that Vivian and I recorded, and I think that podcast is going to give great background information for someone who's never done their taxes before or is still confused by it. But having already completed my taxes now since the time we recorded that podcast to now, I realized there's some stuff that's changed this year or might not be clear based on that podcast for people actually wanting just a step-by-step guidance on how to do their taxes this year. So that podcast, I'm going to really refer you to that. Please listen to it for background information. And let's just dive into how do you actually fill out your 2021 taxes. So I'm going to go through what I did, the questions asked for me. Now, my specific situation is for people who are employed by an employer who will provide them with a W-2 form, which is the form that fills out your salary and basically some other information, but it's mostly salary. I have things saved down onto my laptop. I recommend doing that. So basically you just get your W-2 forms, and then if you have a bank account, you log in and go to the tax form section on your bank account, and there should be 1099 INT, which is the 1099 interest forms, and there should be a 1099 dividend section if that's applicable for if you have a brokerage account. So there's bank accounts and there's brokerage accounts. Brokerage accounts specifically are for if you are investing in something. So those investments accounts will have a 1099 interest and typically a 1099 dividend statement. They'll also tell you your capital gains, which is only relevant if you're itemizing your taxes. So basically, quick background overview. The whole point of taxes is that you take your W-2 and your 1099s, which are proof of your income. So if you're in our age cohort, which is basically just young professionals, you don't have kids, you don't have property, you don't own anything, our taxes are really simple. And so basically all we have to figure out is what money we made, what can we deduct from that amount we made, so that the final total that the government uses to actually calculate how much tax we owe, which is also known as our taxable income, is lower, right? Because you want to pay as the least amount of tax possible. So it's just when you log onto your tax software, which if you listen to the prior podcast, we go into that a little bit. You basically pick a software. TurboTax is popular, Credit Karma is popular. I'm currently using TaxSlayer this year, and that's because I had a special unique circumstance where since I moved this year, I have to fill out 2 state tax returns, which Credit Karma only lets you do 1. So I probably would have tried Credit Karma this year if it weren't for that situation. But alas, I have to fill out 2 state tax returns, and so I had to go to TaxSlayer instead. Same thing though, they all basically walk you through with questions, and they basically have it broken up when you log on to the tax software as your income section, your deduction section, and then I believe it's like credits. Let's see, what's TaxSlayer. So basically I logged onto the software, it has basic information. So that's your personal information, and if you log in, it's going to be general, your mailing address, phone number. They need all that so that they know where to send the money. Your filing status is going to be important. We're all pretty much single unless you're married and filing jointly, or divorced, I guess, at this point. But for the most part, our age cohort, you're going to be a single or married filing jointly. Dependents or qualifying persons. Again, we talk about that a little bit in the previous podcast, but basically if you have a kid or you're taking care of a relative, that's going to be where you fill out that section. Most of us don't. So the thing with tax returns is if you don't know what it's talking about, more likely than not, it doesn't apply to you. So you can just skip it and move on. Don't feel like you have to fill out every little thing. You don't. If it doesn't apply to you, just leave a blank and skip it. Which is great. So moving on, I want to be guided. And what they're going to do, you pick the guided, you can either fill out the form directly, which is a choice, and I think more stressful because then you're worried about getting the right numbers in the right box. Whereas if you're guided, then they'll ask you questions, and that way you can just answer the question as opposed to worrying about, is this going to be the correct thing? So I chose, I want to be guided, and now they're going to ask me questions about what income I make. So the first thing you're going to do for when you're employed is you're going to take your W-2. You say, I have W-2s. You say, yes, I do. I do have W-2s. And you take them. Okay. Should have done this sooner, but I'm going to pull it up real quick. I have a taxes folder so I don't go absolutely insane. So yes, I have a W-2, and a W-2 form, you can Google it. Basically, I don't know why, but they give you like a bajillion copies on this one form of the same thing. So basically, you're going to look at this W-2 form, and what you're going to see is it's going to be like 4 things of the same thing. No joke. It's like, and it looks so intimidating because it's just repeating itself, but that's because there's multiple copies. So if you're looking at it and you're like, it's the same thing, it is. Don't worry about it. Okay. So I'm pulling up my W-2s. I have 2 because, again, I changed jobs and moved this year, which was a choice, but, God's funny like that. Okay. So pulling up my W-2 right now. What you're going to do is you're going to answer the questions, you're going to enter it. So your W-2 has a box D, that's the control number. And then it also has a box B, which is your employer's federal ID number. And they're going to ask you for both of those things. So what you're going to do is you're going to say, yes, I have a W-2 to add. You click the add button, and it's going to ask for your employer's identification number, and that finds your employer's number. And so you're going to put it in there. You say, yes, I do. It's a long number. It's like, you got to get them all. It's the dashes and stuff. And then you're going to go, it's going to ask you if it has the control number, basically. And then you're going to put it in, and it's basically going to pull up the W-2 from the ADP website or whatever website is storing that information that your employer put it into, which is nice because then you don't have to fill all of it out. And so it should pre-populate based on the control number that was in that box D. So now you have all your information kind of pre-imported, and what you're going to do is you're just going to go down the form and check all the different boxes. So the 1 should correspond to the 1. So every single box is labeled 1, 2, 3, 4, A, B, C, D, whatever. And so the 1 should match box 1, 2 should match box 2, etc. So you just go and you check and make sure all the numbers are right. If you have a box 12 is kind of a unique one. If you have different things there. So there could be if you have an HSA withholding for health savings account, the employer contributions would be marked with a code W. If you have Social Security or employer sponsored 401k or health coverage, that kind of stuff, that's going to be in box 12. If you have a retirement plan, that's going to be in box 13. But if all of those boxes are blank, you don't have insurance or benefits through your employer, then just leave it blank. Don't stress. Don't overthink any of this. I promise you. So if you have it blank, just leave it blank. So basically, you just check the W-2 form, make sure it matches, hit OK. You've imported this W-2. I had multiple W-2s to put in because I had multiple jobs this year. So you just put in every single W-2 wage statement that you have, and that's basically the majority of the income that you have this year. So then you hit continue, you're moving on. Now it's going to ask you if you had other types of income. And the most common form of this is just your interest income. And that's where the 1099 form comes into play. So, excuse me. So if you look at it, it has prior year state and local refunds. Okay, so this is basically, there's a whole bunch of tax rules. There's one about, if you want to use or put towards your previous year's state refunds, or if you received it in 2020, there's different rules that you could get a deduction off of or whatever. I honestly don't fully remember. And the bottom line is No. The answer is no. You would know if you did this, and if you did this, I don't know what crazy thing you're doing, but the bottom line is for the lay person, it would be very uncommon that you put yes for that answer. Okay, so now I'm at interest in dividend income. As I was saying, these are the forms 1099 INT, interest form, dividend form. I don't remember what that stands for. But there's also like the 1099G if you have unemployment income this year and other things like that. There was an R, like if you have a pension or something. You just look at the form that you received and it should be labeled on there somewhere. So definitely just look at 1099-whatever and pick that one. So if you have any interest or dividend income this year, you hit yes. And basically, you probably should. You definitely get at least like $20 or something from your bank. So you just go to your bank website, your brokerage website, whatever accounts you have. They should have the tax forms all available. You download them and you input those forms to this software. So it's asking you, do you have any interest income? You hit yes. And it says add a Schedule B. This all eventually flows to a Schedule B, which you don't really need to worry about because what the software is doing is it's pre-populating it for you. But basically, it has your wage income, and now you're going to fill out your interest income. So you're going to select which form you have. You select the 1099. Again, it's going to ask for your name, your payer, TIN or EIN. Again, that should be labeled on the 1099. I will pull up a 1099 that I downloaded just to see if I can find it somewhere. But it should be on your form. Payer's Fed ID number. That is that number. So again, it's like the W-2, your employer's federal ID number. It's going to be the payer. So in this case, like Fidelity or T. Rowe Price or an E-Trade or something like that for a brokerage, Ally Bank, Chase Bank, whatever other bank that you have. That's the payer's federal ID. The payer's federal ID number is what's going to go in that EIN, TIN column or box. And then you're just going to put in the city and state that you earned that income in, pretty much wherever you live. And then you just put in the interest income based on the statement. And there's going to be a bunch of other boxes. If those are all 0 on your statement, which it should have them all, then you just leave them totally blank. Skip it all. You skip, and you hit continue, save, and you're done. You've imported the 1099. So that's how it basically works for all of those. Once you've imported them all your dividend incomes, your interest incomes, you say, I'm done, and you skip because you don't have any foreign bank accounts or whatever. You don't have any retirement account distributions. This is really rare. It's basically only if you had a pension plan at an employer and then you left that employer and they liquidated or paid you out. That would be the instance that you have a 1099-R. And then that's when you put in this form as well. Same procedure, same idea. After that, though, you've pretty much finished the income portion. So now you've basically said, this is the total amount, government, IRS, of income that I have made in the whole year. I don't want you to tax me on all of it, right? So now you're going to move on to the deductions part. And this is the part that gets a lot more complicated and trips people up because they're trying to, get the best deals that they can, right? Because of course you want to pay the least amount of tax possible, but you also don't want to be stressed out in doing your taxes. So for the deductions part, you're reducing your taxable income, and you have the choice to either do the standard deduction or the itemized deduction. And the standard deduction this year, I was incorrect in the last podcast. I'm going to have to put a note about it. Last year it was $12,400, and this year it's $12,550. So they upped it a little bit, which is great. And so that's the standard deduction this year. If you do not have itemized deductions, and these are specific deductions, which they will ask you questions on, over the standard deduction of $12,550, then it's not worth it to you to itemize your deductions. And you might as well just save time and energy and just do the standard deduction. Now, I don't know what it's like for all the softwares, if they'll ask you straight up if you'd like to do a standard deduction, or if you can basically choose to tell the software to pick whichever one is the most advantageous. But basically, that's what you'll be doing in this next section. Now, some things that I learned this year: when you do the standardized deduction, you don't have to break it down like itemized deductions, which is why it's easier. However, in addition to last year, this year you can deduct $300 of charitable contributions in addition to your standardized deduction, which is great, so that if you've donated over $300, you can take $300 as a maximum out. If you donated less than $300, you can still take however much you've donated. Like, say you donated $250, you can deduct $250 off that. And charities will give you like a receipt to prove this. And so that's awesome. That's one thing to know if you are using the standard deduction. If you are doing the itemized deductions, then you'll probably encounter things like capital gains and losses, which you can use your brokerage statements for. You'll also encounter things that probably don't apply to you. It's really not in our current cohort to itemize your deductions. It's just not really relevant. And so what you'll find is in this section, you'll just be skipping a lot because none of it really applies to you. Ultimately, though, what it's going to do is the software is going to calculate it so that you do the standard deduction. So you can pretty much breeze through the whole deductions section, because after you've put in all your income, you're just going to take the standardized deduction. So other than putting in your charitable contributions, you can pretty much just skip. And then it'll pretty much be done with the federal tax return. And then what you'll do is the state tax returns. And so you need to look up specific rules for your states, because California and Virginia, which is the two that I had to file, are different. Every state is different. California had itemizing options. Virginia, you pretty much just use the standard. You just kind of gotta look and see. It's very unique to each state. I can't really comment one on the other, but you just read, and if something seems like it applies to you, like California has a renter's credit. That was great. I put that, but honestly, I wouldn't stress about it that much, because what all these softwares will do is, for the most part, pre-populate the state tax returns based on your federal returns for you, which is really nice. But definitely go open them up, go through, answer the questions. It's going to be the same thing, though, where it's like, what income did you make? What deductions apply to you? This is what you owe or owe us, okay? And so when you imported your W-2, you also imported how much your employer withheld from your paycheck. So like every single paycheck you get in your pay stub, you're going to see things deducted from it, which are the federal, the state, and the FICA tax withholdings, and possibly your state's like unemployment tax withholdings as well. You're going to see all these tax withholdings. The FICA tax is the Social Security and the Medicare. And so that you've been withholding parts of your taxes all year, and your employer is doing that for you, so that's not something you have to worry about. However, you might have chosen what you elected to do when you first started with your employer. So just be aware and make sure that you chose to have your employer withhold your taxes, or else if you chose to do it yourself, then you're the one that needs to be saving or setting aside the money to pay all of your taxes at once at the time that they're due, which I don't recommend, because that just sounds stressful as all get out to me. So, okay, so you're paying your taxes, and now you've done the income and the deductions for both the federal and the state, and you've also put in what you're withheld this year. And basically what it's going to do is it's going to calculate your taxable income and then the total tax you owe in the software. And then it's going to say, okay, what tax do you owe? And then what did you withhold to pay taxes? And if you withheld more than you owe, then you get a tax refund. Huzzah. It's what we all want. This year, I did not realize there was a third stimulus check that I never received. So there is an additional potential refundable credit that you'll get on your federal return, which is exciting. And then you get the calculated refunds back from your federal and your state taxes. And then you'll probably have to pay the fees from filing fees from the software, which isn't as fun. I think mine was like $130 because I had to pay for 2 states. It should definitely be cheaper than that for you if you're not in that boat like I was. And so that's pretty much the gist. And then you just hit send and congrats, you've filed your taxes. And that's it. You go through, you put in your income, you put in what deductions apply to you, which the answer is basically none besides the charitable deduction, and the software will calculate the standard deduction for you. And then as long as you've been withholding your taxes and you have more withholdings than the taxes that you owe, you'll get a refund. And fill out your taxes sooner than later because they're due April 15th, and don't wait to the end, because as long as you've had all your forms, which is the W-2 and the 1099s mostly, which is your income forms, then you might as well get that refund money sooner. And that credit, which is nice, that stimulus check. So the bottom line is, go get your money.
And that's our show for today.
Thank you for joining us. We'll see you on our next podcast.
We hope you continue to face adulthood head on. We've got this.
Follow us at Entry Level Adulting on Instagram, intro and outro music by @deepwho_ on Twitch.
Bye, friend.